Hello, everybody. I hope you guys are having a fantastic day. I want to share you an options play that I just bought into. I spent $9,000 on this options play, and it's for a stock that almost nobody is talking about, and I'm one of the few YouTubers that was covering this stock. The stock is HIMS, H-I-M-S, and HIMS is a telehealth company, but they use telehealth as a means to an end, and the end is pushing their products. Their products is taboo men's and women's health. For example, for men's, they have erectile dysfunction, so your prick works, hair loss, skincare, things like that. For women, they have similar products, including like contraceptive, things like that. And they have an expanding product line. Now, I was talking about HIMS when HIMS was $3. Check this out. This is the chart of HIMS. And as you can see, today they're down 6%, for the week 16%, for the month 14%, 6 months 17%, year to date they're only up 15%, and for 1 year they're only up 11%. 5 years they're down 25%. HIMS came out over here, I believe it was a SPAC if I'm not mistaken, it blew up to $24 and then it came all the way down. Right around here in May, I started talking about it on this channel when I was an investor in HIMS. I got into it a little bit before this. And then we were able to ride up all the way from $3 to $24. And then from $24, it's now down at $7.40. So some people might ask, well, Adam, if HIMS is down, isn't it a bad stock? You would think it's a bad stock. However, HIMS is a fabulous stock that absolutely smashes all earnings. You see, last night, HIMS was up 17% after market. And I'm going to show you the earnings in just a moment. It's a ridiculously good company. And this morning, they were still up around 15%, but now the entire market took a shit. And HIMS is currently down 7%. This is the HIMS options. I ended up doing a January 2025. I ended up doing a $22 call. As you can see, it's currently down 31% for the day. So I ended up getting this because I think it's a fabulous, fabulous value. On just the strength of it being down 31% on the day, when this is going to bounce back up and HIMS is going to go back up 10%, when it's going to go back to like $9 or $10, I believe that you're going to make a shit ton of money on this, which I'll show you the calculator in just a moment. Currently, they're 40 cents a contract, 40 cents a share. I ended up buying $9,000 worth of this, and you're getting it at a better price. I ended up buying this for 45, not 40, because I wanted my, contract to go in. Currently, the price of HIMS is only around 5% down. Okay. Now I want to show you what earnings looks like. Earnings revenue was up 83% year over year. They smashed revenue expectations. Subscribers grew to 1.3 million. They added another 100,000 subscribers. For like the last 5 quarters, they've been adding 100,000 subscribers every single quarter. And HIMS has over a 95% stickiness rate, which means if you're a subscriber, there's a 95% chance you're not going anywhere. It's reoccurring revenue. They're growing this by 74% year over year. And they raised their full year guidance. The thing is, when you raise the full year guidance for HIMS, they raise the full year guidance and they raise every expectations for every single quarter. And when they raise it, they still smash all expectations. And that's the craziest thing. It's not like they're just smashing expectations. They're raising expectations and then they're smashing it. Take a look at the actual presentation. Guys, just look at these numbers, okay? 74% growth in subscribers, 83% growth in revenue, 12% adjusted EBITDA margin. By the way, they reached EBITDA profitability approximately a year and a half early. Really impressive. 90+% reoccurring revenue. That's that subscription-based model that I was talking about. 90%, which means that they just keep rolling the money in. Gross margins, 75%. They actually came in at 81% this quarter. And they don't want to be past 75%. The additional 5%, 6% that they're making, they're actually reinvesting in the business. Just think about that. The company is growing 83% revenue. 83%. Last year, they grew over 90% revenue. So it's not like a one-hit wonder. Every single quarter, they're growing 80+%. Last year, they were growing almost 100%. I think it was like 93 or 93%. It's absolutely absurd. 90% reoccurring revenue model, which means that they just print gross margins over 75%. And they have a payback period of 1 year. What does this mean exactly? That means when they invest $1 in the company, they make that dollar back within 12 months, except when they spend money on like promos from like social media experts and social media influencers, let's say. These are massive numbers. If Palantir hit these numbers or PayPal hit these numbers, they will be going through the roof. But because it's HIMS, nobody's giving them any credit. And check this out. For men's health right now, they're offering these things right here. They just rolled out cardio. They can then add testosterone and prostate in the future. For women's health, birth control, STDs, libido, in the future, they're going to do menopause and digestion. For dermatology, they have hair loss, acne, aging. They're going to add eczema and rosacea, whatever that is. There's a lot of things that they could add. And now they're going to add prospective markets. Remember, they have a 90% reoccurring revenue model, a subscription-based model. If you're using one product, they're going to cross-sell you into another product. Their user interface on their website is super duper interactive. You guys can check it out. I have many videos on my regular channel, not for channel members. This is absolutely freaking massive. Check this out. This is their board, by the way. This guy is very politically driven, Andrew Dudum. But other than that, he's actually a good CEO. This guy worked at Uber, and check this out. He worked at Braintree. Braintree. Where did we see that company before? PayPal. She worked in Google. This guy worked in Walmart. This is their C-level executive, which is very, very important. They also have an executive advisory board, which is the 15 leading experts, right? These are their medical advisory board. And they each have their own specific niche that these medical advisors are into. And that's how you're going to expand your market. That's how you're going to offer more services and more products to people. Go a little bit lower. Check this growth out. This is absolutely crazy. And this is some of the innovative products, right? So, for example, instead of giving you Viagra, they have something called hard mints. So you're literally taking a mint. You're on a date. You want your dick to work. You take a mint instead of taking a Viagra. I know it doesn't seem like a big deal, but it's absolutely massive, guys. Like, this is the little innovation that actually helps you. This is what they just introduced. This is for cardiovascular, for your heart. But what I really wanted to show you is this right here. This is their revenue chart. In Q3 of 2021, their revenue was literally 74 million. Then it went to 85 million, 101 million, 114 million, 145 million, 167 million, 191 million, 208 million. It's absolutely freaking massive. Look at their numbers, guys. Their numbers are up 83%. And this is every single freaking quarter. And look at the subscribers. This is the subscribers that they're getting, okay? 499, 554. This is in millions, guys. 554 million, 646 million, 748 million, 1 billion, 40 million, 1.2 billion, 1.3 billion. Like, just look at the growth. It's absolutely freaking phenomenal, guys. And this is how much they make per average user. 53, 50, 52, 51, 56, 55, 55, 53. So they're making an average of $53 per average user. These are big, big numbers. Big, big numbers. So the amount of users that they have keeps going up. The amount of revenue that they have keeps going up. And the amount that they're collecting per user is staying pretty steady. However, this number also tends to go up. I think they're going to get it back to $56 because they're going to keep cross-selling more and more things. Now, this is the EBITDA. Remember what I said. The adjusted EBITDA became positive, 2.3%, 3.2%, 5.1%. But look where they were literally in Q3 2021. Negative 13%, negative 8%, negative 6%, negative 6%, negative 4%, positive 2%, positive 3%, positive 5%. These guys are absolutely monsters. And they were not supposed to have positive EBITDA until next year. They were literally a year and a half early. Very, very, very important, guys. This is the revenue that they're expecting for Q3, okay? The revenue is going to be 217 to 222 million. For full year, it's going to be 830 to 850 million, right? Look at the growth, 50 to 53%, 58 to 61%. I'm going to show you a slide right now. This slide is going to be from last earnings. Check out what it says. Check this out, guys. They were guiding for this quarter, the one that I'm going to show you right now, they were guiding 200 to 205 million. They ended up beating that expectation. So last quarter, they grew 88%. This quarter, they grew 83%. However, if you go to last quarter, they were projecting 76 to 81. So they keep consistently beating numbers. But this is a very, very important thing. Let's go back even one more quarter, okay? This is quarter 4 of 2022. Remember how I told you that they were up almost 100%? 94%. 94% year over year for the entire year. And quarter 4, year over year, 97%, guys. 97%. This is absolutely crazy. But let's take a look at the presentation. So this is what they were guiding for quarter 1 of 2023. Guys, they were guiding for 73 to 78%. 73 to 78%. And remember, they raised the guidance. They ended up coming in at 88% at 190 million, okay? Remember, they were saying it's going to be 175 to 180. They ended up coming in at 190 million. But check this out. They were estimating that for the full year, right? Originally, they were estimating for the full year 2023, they would make on the top end 755 million. Watch this. Then last quarter, right? So quarter 4, they said that in 2023, the full year on the top end, they will make 755 million. Last quarter, they raised it. Instead of 755 million, they now said 830 million. Guys, it's absolutely crazy. They went from 39 to 43%. Then they said 54 to 58%. But check this out. Look what happened in this last earnings. In this last earning, they raised it again to 58 to 61%. Top end 850 million. So they went from top end. So they went from top end 755 million to 830 million to 850 million. What does that mean? That's what I mean when I say that HIMS not only smashes earnings, they raise the bar and then demolish the earnings after raising the bar, which is super, super duper impressive, guys. Because of everything that I said, that's why I see HIMS as an absolute beast, and they are so unjustified because not only do they kill earnings, they smash earnings after they raise earnings, and they keep coming through. I think in the last 7 earnings that I've been following them, they only missed earnings once. The last 2 earnings, this one and quarter 1 of 2023, they get no love. It seems like as the money is going into the tech sector, less money is flowing into HIMS. But when the entire market was down in 2022, HIMS was the absolute darling of the stock market. I was up like 260% on HIMS, right? Even demolishing what I was up in Palantir this year. Let me show you the options calculator. Go into HIMS, and then I'm going to do select the options, January 2025 to $22 call. Let's do a range. Let's say that HIMS is going to be, let's do between, this is, remember, 2025. I honestly think HIMS is going to be past the $20 mark, but let's say $15 to $25. So HIMS needs to double from where they are right now. If HIMS doubles from where they are right now, let's go in a year from now. If HIMS doubles from now and a year from where they are right now, you would be making 163% on your money. So you would be making more than the double. HIMS is doubling. You're not only making 100%, you're making 163%. This is if it happens by August. But let's say, for example, HIMS hits $20, like I believe it could, because again, they are so undervalued. They are such a better company than Teladoc. Dude, over here, you'd be making around 3x on your money. But over here, you're making around 6.5x on your money. For me, it's a very, very simple choice. I think that these HIMS options are absolutely beautiful. HIMS is absolutely shitted on like crazy. They're getting no love whatsoever. As a matter of fact, I need to make a HIMS video. Maybe I'm going to publish this video in a few days on my regular channel because a lot of HIMS viewers wanted me to make a video. So I'll probably end up putting this out for non-channel members, but not today, in a couple of days, maybe tomorrow or later on in the week, maybe. But anyways, that's my play, January 2025, $22 call for HIMS. You guys are going to be getting in for a cheaper price than I am. I think that this is a beautiful play. The technicals are not the greatest for HIMS right now, and HIMS can actually keep going lower. But because of HIMS smashing earnings, I don't want to take a risk that HIMS is going to come back strong and I miss the opportunity to buy in. If HIMS dips more and it dips closer to the $7 or sub $7 range, I'm going to double up my position. So if HIMS goes to like $6.50, $6.90, I will double up my position. I hope this helps you guys. I hope you guys are getting your value in. And as always, it doesn't mean that you guys should do this play or not do this play. The only thing this means today is for you guys to do your own research and make your own due diligence on this specific options play. And remember, don't get gully and overexcited with options. A lot of you guys spend so much money in options and you guys are getting absolutely wrecked. Don't put your last money into options. And just because things are going up today doesn't mean it's going to go up tomorrow. Remember, everything doesn't just go up. Thank you and have a great day.